Hi everyone, this is Rich, Mr. Thrive and Survive. This is going to be a economic update that is going to be on the Mr. Thrive and Survive channel for now. You may have noticed at the beginning that this is also going to be on the Thrive and Survive Rebooted channel. And there were going to be now more economic videos being done, especially once the new site starts here in a couple weeks. And they will be on the Thrive and Survive Rebooted channel. But every now and then I will have a video that bleeds in here with other subjects, including this one. If this upsets you or whatever, tissues are probably on sale somewhere, so go get yourself a nice box. This is a very important thing that's going to affect all of us who can hear my voice. I don't care what country you're in, because this is the big kahuna as far as economic downturns is concerned. And I'm going to update everybody here. I said I was going to wait until I got to the point where people were actually begging for me to come back and tell them what's going on or give them my opinion. That is now happening, so I'm back doing this. So let's take a look at this. This is a very important thing right here. This is West Texas Intermediate light crude oil. Ticker symbol $ WTIC, also known as West Texas Intermediate Crude. This is the culprit of all of our problems right now. And I'm not going to get into the politics of what the issues are, but you are looking now at a monthly chart of light sweet crude. And we have here in 2008, in the middle of 2008, we had a high of roughly $150 per barrel for oil. We had the ensuing economic crisis of 2008, which took place. Oil then plunged down to $35 an ounce. Ever since then, it's been slowly creeping back up. Got back up to about $120, $125 an ounce, roughly, 130 maybe. And ever since then, since, I don't know, the first quarter of 2014, we have been working our way down into a wave 2. Now, for those of you who are not familiar with the Elliott waves, I will be covering that very shortly here in detail. There's going to be a lot of recap on this, so it's going to be a longer video. In any case, there are two possible counts for this. One is that the WTI crude, oh, by the way, crude oil today spiked down to about $23 a barrel before, I'm sorry, that's wrong. Spiked down to under $28 a barrel. I wouldn't actually call it a spike. It dipped down below 28 and then closed at $28.33. Back in 1999, we had crude oil roughly trading at $10 a barrel. That is actually a possibility. On wave 2s, you can retrace 100% of the move. Now, there's two possible wave counts here, and it's the US dollar that's probably going to determine which way this thing is going. Either way, we are due for a bounce soon in crude oil. The wave 2s come down in 3 wave movements, A, B, and C. Now, it is uncertain if that's what this is. There's two possible ways for crude oil to be working out now. It took from 1999 to 2008 to do its wave 1. That is almost a 9-year period, really, when you look at it, because it started really late in 1988 and went halfway through 2008. So almost 9 years it took for crude oil to climb from $35 to $150. You would expect then probably a 5-year or so retracement period down before you had another upturn. And the downturn started in 2008, and we are now 8 years into that. I'm not sorry, 5 years. We're talking about an equal amount of time for this to come down. Now, because normally what this does is after you have a intermediate wave, when you're talking about the monthly chart here, you're looking at the next to the highest cycle there is. This is the cycle. Where one on type of this, there's a grand super cycle. This is a super cycle. That's what I'm calling it anyway. On top of this is a grand super cycle. For those of you who haven't heard the Elliott waves being announced from me before, I don't necessarily mark them correctly. I'm not into the correctness of it. I'm more into, as far as the labeling, I'm more into making sure we know what is getting ready to happen in the marketplace. In any case, all of this move so far could be wave A, followed by a wave B up, and then a wave C down. However, since this retracement is so steep, it's more than a 50% retracement. And if it continues, especially, the lower oil goes, the more likely that this whole thing right here is A, B, and C as I have it labeled. So that's one thing we're going to have to take a look at. If crude oil gets down any more, really, chances are we're just about complete. And guess what happens after that? We end up going into a wave 3, which is massive. So if you think the prices for cheap crude oil are here forever, you've got a big shock coming. Now, the question is, what is going to cause this to happen? What would cause all of this to happen? So let's take a look at this a little bit deeper here. So at some point, we're going to hit this wave 3 coming up right here. And that's going to be oil a long way from where it is right now. Now, I've put the Elliott wave count over here so people can know how it works. It works 5 waves up, 3 waves down. And we have completed wave 1 back here in 2008, which is represented right here on the chart. And then we come down in a 3-wave corrective form, A, B, C. As I said, the only question is this whole thing so far coming down to wave A, and then we have the B and C to go? Or more likely, I think now, all of this coming down is A, B, and C. A, B, and C. Now, C would come out in 5 waves. We can justify that. 1, 2, 3, 4, and 5 is now developing and in progress. At some point, if this is the case, I would say this is more likely because of how much it's retraced. You can see what you get then is you get a massive shoot off in the other direction. So a major rise in crude oil. Now, let's ask ourselves the question as far as geopolitical concerns are. We know all of a sudden now the economies are slowing all over the world. So what would suddenly raise oil? The only thing I can think of is war. So let's look at some of our possibilities, I think, that are facing us with the rest of the major depression that's going to hit that started in 2008 and which has artificially been propped up ever since so that we don't quote-unquote feel it, although many people have felt it. But there's a lot of people that are in total denial because of the 15, 20 trillion, whatever you name it, that we know of that's been printed around the world. Actually, that's been printed in the U.S., but all the money that's been printed around the world to try to keep this thing going is crazy. And it hasn't worked. That's obvious. And once we fall out of bed with this thing, it isn't going to be pretty. So here's what I think is going to happen looking over here now. Bank implosions. Banks everywhere are right on the brink. I have an old video that maybe I'll have to dig out and put it separately on the Thrive and Survive Rebooted channel. I will have a link to that channel in the more section or the about section below. I will have a link there. If you want to get these economic updates, most of them are going to come there. Please sign up to get notified there when I post videos. They're going to start coming more regularly now because we're in the throes of it. Just because people believed the lie before. See, this is all part of a truth movement as well. Because everybody believed the truth or the lie before that was presented as the truth, that we're all doing better now. Obama just came out, I understand, in the Oval, in the last address to Congress for State of the Union, and claimed the economy was pretty much everything is roses, everything is great. What a liar. What a freaking liar. And I'm going to repeat it again. I started saying it about 3 years ago. And isn't it amazing? It's coming to pass. People are now seeing it. Obama is now hinting that he would, I think I could make another term. I think I would get voted in. He's going to be there, guys. He's not going away. I've been saying that for years. This is the puppet master. And I don't want to hear any more. You can write it as stupidity. that he is just a puppet or whatever. He's going along with the program. He's just as guilty as everybody else. I'm sorry, but he is. I don't want to hear, well, he's just a puppet, he's just a handler. So what? He's doing it, isn't he? Just as guilty. So this idiot Obama isn't going anywhere. And if he does, hasn't he already said it now? He said my other option. I always gave the one out for him not to have an election this year. One out. I said some crisis will develop in the last year where he will not allow the election to happen. But if he does, his one out is going to be he would be the Secretary General of the United Nations. I said this years ago. It's in one of the videos that is still up there on YouTube here. Believe it or not, my first few years, it was all economic videos, pretty much. I didn't stumble on the flat earth until this May. But I said the only other option is if the elections take place, he would be then the head of the United Nations. And that's what he's talking about. He wants to be the Secretary General of the United Nations. Because you know what he's going to do? He's going to sign an executive order before he leaves that will make the United States subservient to the United Nations and to the UN Secretary General, which will be himself. I'm telling you guys, he's going nowhere. When they came out and said he is the one to bring in the New World Order, since it's not totally here yet, he's not gone until it's totally implemented. You can bet on that. Bank implosions. The banks have been the most artificially propped up entity around the world. Investment houses and bank failures like Goldman Sachs and things like that, they're going to be on the way. And it's just a matter who it's going to be first. Now, they've declared an emergency in France. You know why? It's the banking system. I don't care what they say it is. It's the banking system. So it's a matter of, it's going to be Deutsche Bank? What is going to be the first bank that zeroed out that something's wrong? And once they start, reeling them off, the different companies that are going to go under, it's not going to be like Lehman Brothers and the 20 others they mentioned, and Lehman Brothers and one or two went under. Everyone they mentioned this time is probably going to go under. Where last time they saved most of them, this time they will lose most of them. And when you understand how derivatives work, you'll understand that there's no way out of this, folks. They can delay it. They did it with quantitative easing, 1, 2, and 3, QE light. They did it with all that. But here we are, still sitting here with the problem. Massive unemployment. You think unemployment's bad now? And it is. It's really 21%. Go to shadowstats.com. Find out the real unemployment rate. That's the real unemployment rate. What happens is, for all of you who are new to this, what they do is, if you've been on the unemployment rolls and you stop looking for a job because you just can't find one, or you fall off the list because you're no longer eligible after a year to get unemployment, then you're considered employed. You just dropped off the list. You're no longer unemployed. It's amazing. Deception all over the place. But unemployment, you think it's bad now. We've mostly filled the jobs that, we took $30 and $40 an hour jobs and replaced them with $15 an hour, $10 an hour jobs, whatever. And most of those are in the service economy. The service economy will collapse as soon as we keep going down the path we are right now, because the service economy is based on no production of goods. And when people don't want to, when they don't have the money to go get a tan or some kind of other luxury, or just go, spend a weekend at some hotel near Disneyland or some other amusement park, when people can't afford to do that anymore because a member of the family got laid off, then these service jobs like maids and other services and things like that, taxi drivers, just things that don't produce goods. I'm not saying there's anything wrong with it. There's nothing wrong with it. There's nothing wrong with work or with this kind of work, but it produces nothing. So it's, as soon as these people cannot afford anymore to go travel and do things they've normally been doing, these service jobs are just going to disappear. When people can't afford to go out and eat like they did before, I don't know if you remember, but see, it's gotten back to the way it used to be. What happened was, like places like Outback, or these places you have to go and wait in line, TGI Fridays. On a Friday, you have to wait in line. Well, if you remember back in 2009 when the crisis was at its peak, you could go in any time and get a seat. Nobody had the money. Everybody was getting laid off. Everybody was scared. We're going to go back to that. And when they do, they're going to lay off waiters and waitresses because they're not going to be as busy as they are now. It's just a fact of life. Now, we got something interesting going on. Looked at the Canadian dollar today for the first time since May. I could not believe it was down to 68 cents to the dollar. It was almost at parity the last time I looked at it. Well, a little bit less because it finally had broken down. However, the Canadian dollar may do better than I was originally thinking because it is into Canadian dollar and the Aussie dollar. They are in particular connected to commodities. And I think commodities, some commodities are going to do well. Others are not. We're going to have hyperinflation inflation on selected currencies, as I just said. We're going to have major deflation with what's called durable goods. Now, durable goods are things that last for a long time. Automobiles, housing, other things that just don't wear out, that last for a long time. That's going to go through a major deflation because people will not be able to afford it. They will hold on to their cars. They just won't, they'll put off buying a second car or a motorcycle or a computer, things like that. So durable goods are going to drop, I think, pretty massively once it gets going. Now, the perishables, like food and other things like that wear out, they're going to go through high inflation or maybe even hyperinflation. So we're going to have both happening at the same time. I'm pretty convinced of this right here. We're going to have something that was defined during the Carter administration. The Carter administration had stagflation. That means industrial growth falls. That goes into contraction. Industries and regular business activity goes into a stall. But at the same time, you have inflation with goods. But because the industry is going into a stall, they can't raise your wages. So you're stuck at $12 an hour. Meanwhile, your grocery bill has gone from $250 to $300 a week. So stagflation, the inflation along with stagnation as far as growth in business. Household goods increasing in price. I just covered that really. Perishables. Anything that perishes is going to really go up in price. And why? It's because all things, there's a price to pay for all things, folks. We hyperinflated the dollar. That's already been done. People say, well, hyperinflation is not here yet. It's already done. And I'm sure we're going to have to cover these definitions again because people have forgotten, or there's a lot of new people that haven't even heard this. Hyperinflation is the printing of money. That's already happened. Price inflation is a different story. We haven't had the price inflation yet. We've had the hyperinflation, which means printing of money. We've done that. Massive retail layoffs. What is it, 269? Walmart stores have already been cited for closing down. I think it was 270,000 employees, over 200,000. I can't remember the exact number. That's just with Walmart. Imagine some of these a little bit higher echelon stores like JCPenney and Sears and things like that. They're all going to be affected. If you have 270,000 people laid off, they can no longer buy at these other places. So those places start having problems as well, and they need to start laying off. It's just a domino effect that's really going to get kicked off this round here. So massive retail layoffs, unbelievable finger pointing, and this is what's going to stop everything from being normal and going towards war. Because when the finger pointing gets well defined, and it will, it's going to be pointing at the Federal Reserve, which, by the way, for everybody who is new, the Federal Reserve, as they say, is no more federal than Federal Express. It's private. The United States government borrows from a private institution called the Federal Reserve, who prints our money, which is unconstitutional. And that whole mess there is going to come to roost this time, this collapse. So they can't have the finger point at the true devils in all this. So the way to blame it on something else, usually the pattern in the past has been to start war, and boy, are we seeing that starting. How many flashpoints do we have that could explode at any moment now around the world? This is on purpose, folks. They know what's happening. They know before the public does that it's getting ready to melt down. People didn't want to believe it before, so I stopped doing the videos. Now people are finally seeing it. There's nothing that's changed in the last few months or last even weeks. That wasn't true last month or 2 months ago or 5 months ago. But people have made this correlation to the stock markets, which is a bad correlation. It's what the government wanted you to do. They wanted you to make the correlation. Oh, as long as the stock markets are doing fine, we're doing great. Because they can artificially prop that up, and they know it. But even that they're losing control of now. And so people now are begging for these kind of videos. They fooled you. Nothing is worse, again, than it was 2 weeks ago. But now, as you can see on this chart, everything's starting to fall apart. What's the difference now than 2 weeks ago? Nothing. It's just the people in the industry can no longer prop it up. It's finally reached the point where it's over. Quantitative easing 4. They just raised rates a quarter point, a whole 0.25. And boy, all you heard on the news was for 3 months, is the Fed going to raise? The Fed's going to raise rates. The Fed's going to raise rates. And they raised them a quarter point and we fell apart. So they're going to have to lower them. PDQ, in fact, they're talking about negative interest rates. That means if you put money in the bank, they're going to take money from you. Guys, seek your own financial advisor for all things. But I'm going to tell you what I would never do. I would never put my money in the bank other than what I needed to pay bills this month. And I would keep it safe otherwise outside of the banking system. There is nothing safe about a safety deposit box. They have already passed the laws quietly in this country since the crash of 2008, stating that anything in the bank does not belong to you. It belongs to the banks. The wrong time to finally wake up and believe that is the day after they close the banks down, declare a holiday, and say you can't get the money out. This is what they did in Greece. They quietly passed a little law saying that if they close the banks, you don't have any right to your own safety deposit box, and you don't have the right to your money. It's their money. And when people finally saw that it was in the fine print, it was too late. The only people that got their money were the rich people. Everybody else, of course, paid the price. So this negative interest rates, that means if you have $1,000 in the bank, they're going to charge you a negative interest rate. That means they're going to charge you to keep money in the bank. Why are they doing that? It's to pay off the banks. I'll tell you, it can't get any more corrupt than this. Expect shortages. Shortages in the stores. Please believe me with this. We're going to have shortages, folks. Look up, Google, Baltic Dry Index. Baltic, B-A-L-T-I-C, Dry Index. And look at the late articles that you have in the last week or two. You can filter by that. Guys, a week or two ago, I heard that there wasn't one container ship bringing goods from Europe to America. Not one. Somebody today showed me a link to all the ships around the world carrying cargo, what size they are, what direction they're heading, this, that, and the other. There wasn't one in the Atlantic that I could see going back and forth. Not one. I think there was one in the Pacific, but I couldn't tell if it was coming to America or not, or if it was just going from like Japan to China or Australia to Japan. I couldn't tell. It's getting bad, folks. It really is getting bad. No goods are moving around the world. Do you know what that means? See, if it's not worth filling a cargo ship up to bring, let me just use an example, to bring toilet paper. Let's say we imported toilet paper. If there isn't enough oil coming in to, normally bring that ship over full of oil, and as a side they bring toilet paper. And I'm sure that's not how it works exactly, but I need to use an example that works for you. If they're not bringing the oil, then they're not going to charter that same boat just to bring over toilet paper. You understand? So you're going to start getting shortages of goods that are considered non-essential. Toilet paper, believe it or not, is considered non-essential. I think it's essential. Power outages and infrastructure problems. We're already having infrastructure problems. We haven't built it out. The thing we should have done, the one thing we should have done, talk about, remember all the joke about Obama and shovel-ready jobs? We got nothing out of that. Nothing but a bunch of lies. They fixed a few streets in districts where they voted for a Democrat. So if you're in a heavy Democratic area, they probably fixed your street. If not, too bad. But they should have taken the initiative and actually had us rebuild our infrastructure in this country. It could have caused a brand new revolution in jobs, but no, that made too much sense. They'd rather just skim the money off the top and give it to the bankers. Because of the corruption in this country, we're all going to pay. This is the end of the United States economy as we know it, folks. We are now in the throes of it. And I'll get into more details as we go along in other videos. Derivative meltdowns. I'm not going to get into that in this video. Just know that people have made bets, just like betting on a horse race, of certain companies, insurance policies, the companies wouldn't fail. And they're going to fail, and the money isn't going to be there to pay off these derivatives. And that is going to be a time bomb of undeniable and unbelievable proportions. There's going to be domino effects with industries and currencies all over the world. It's going to be different depending on what industry and currency you're talking about. Again, more details with this in other videos. There's going to be massive political upheaval and civil unrest around the world. Can you tell that Obama's trying to start it here, folks? If you can't, you better wake up. It's coming soon to a neighborhood near you. I'm still going to predict this. There's going to be a suspension of elections this fall, and we're going to have a war. I think the war will come first. We shall see. So let's start looking at a couple things specifically, not in great detail, but just as a primer to get you caught up with what's going on here. This is the S&P 500 on a weekly basis. Look at this one hell of a run-up from 2011 all the way up till August of last year. And I said well in advance, a year in advance, that it was going to be late July or late August that we hit the top and turned. And we turned right at the end of July and into August, depending on which market it was. The NASDAQ turned later than the others. In fact, the NASDAQ was much later than the others. But there's certain cycles that I looked at that all pointed to late summer, early fall of last year, and that is exactly when we got this first push down. And I mentioned at the time, the first push down, people wouldn't believe it was real. They're already freaking out right here. But guess what? This is just the tip of the iceberg. Wait till you see where we are on the charts right now. Anyway, this is a running flat, which you see here on this weekly chart. And we finally got our wave B top. Now, what is the grand cycle? You know, what is the big picture? Where are we? Well, this is Elliott waves heading up. 1, 2, 3, 4, 5. And then you have an A, B, C correction. That's just how it works. And what has happened in the equity markets, the 2008 high that we had in the equity markets, that's when we had the ultimate high in the Dow Jones and all that for quite a while, until just recently when we had this wave B exceeded. That was all a part of the third wave, the strong push up. Wave 3 is the strong push up. We're now winding down in wave 4. And we're in the B part of wave 4. In other words, just look at this ABC here. Just think of it the other way. The first move down is an A. Then you have the B retracement. This is where we are right now. And we're getting ready to hit the C. The A bottomed in 2009. So when we had the S&P 500 go for I don't know, what was it? 15,000, 14,000 to drop down to 666 of all numbers and turned around. That was all going down in A from 3. Okay, but now we've had this running flat B, which is actually exceeded the wave 3 high back here. And that's fine. That's normal. Only a running flat wave B can do that. That's allowed. And that is exactly what happened. And why did it happen? Because of artificial money. The one time you can have an exception was this time, and it happened because of all the manipulation. And, somebody's going to write again. You can't tell any of this because of manipulation. Oh my God. Stupidity on steroids. There has been manipulation ever since there's been a market. In every market, and these waves mark the manipulation. There's never been no manipulation. So there's nothing different now than before, other than it's probably on a larger scale, but it's still being recorded. There's always been 5 waves up in any historical chart, followed by 3 waves down. 5 waves down, followed by 3 waves up. It happens over and over again. It's a universal law. Just like the sun rising and setting, it's going to happen, folks. Anyway, our wave B has just completed in last summer. Now we're heading down in 5 waves, okay, to get down to the completion of wave 4. And so far we've fallen 1. 2 was the recap. We almost got all the way back. Now we've just started wave 3 down. Then we're going to have a wave 4 bounce. That's coming soon. People think, oh, we're out of the woods. And then we're going to have a final thrust down, which will likely be below this wave 3. Doesn't have to be, but most likely it will be. Guess what, guys? That's only going to complete the first wave down. Wave 1. Like this right here, a wave 1 down. Then probably this spring we'll be all happy because we're going to have this fake bounce back in a wave 2. And I'm spending more time on this because this will explain all the other equity markets in North America and most of the ones overseas. Then the crap hits the fan. The big wave 3 hits. We'll have another wave 1 down, and it'll probably be proportional to this. Then a wave 2 up. Then the big wave 3 will hit, and all this will look like little patty cake here. This will be little kindergarten stuff. Wait till I show you where we're heading. I do have a prediction on the S&P 500. We closed today at 1,859.33 on the S&P 500. Are you ready for where I'm predicting it's going to go at the end of this? By the time we're done with this current collapse, the S&P 500 will be 500. You won't forget this number. We're not out of the woods until the S&P 500 gets to 500. And even then we could go below 500. But that actually looks like a good target right now. Okay, folks, just for fun, I loaded this up right here. This is the S&P 500 on a monthly basis. So let me go ahead and explain what I've already shown you here. Let me get this inspect thing off so it doesn't mess up the screen. Here we go. This was our wave 3 high back here in 2008, where we had the S&P 500 at 1,600 roughly. We fell all the way down to 666 in February of 2009. Then normally we would only retrace 100% of the move at the most, but we were in a wave B. Okay, all this, well, I'm sorry, this part right here was a wave A down, now a wave B up. Wave B can be what's called a running flat. And you can tell it's a running flat because look how narrow it is, this whole thing here. It's not this big up and down like this. This is a running flat. And it's the one case where on a retracement you can go above a 100% retracement. This is why most people, including me, for a while thought it was going to end here because, 9 out of 10 times when you're talking about a retracement on like something like this, it will not exceed the previous high because there's only one exception on a wave B that can do that. And of course, this was a wave B and it did the exception. And so what happened was instead of stopping at 16, we ran all the way up because of manipulation to 2150 roughly, 2130, 2140 on the S&P 500. Now, this right here, now we're looking at a monthly chart. Where my crosshair is right now, that was the high that we just looked at a little bit ago. Since then, we've had the 1 down, 2 up. Now, this last bar here, this one bar right here, this is a wave. This has been the January collapse that they're saying so far. This is the collapse. Really, this is the collapse. Look how far we collapsed in 2009. Folks, we've just started. We've just left the gate. And this is all to complete a wave 1 down. Okay? Here was the wave 1 down before, followed by a little 2. Look at the 3 wave. Yikes. Then a 4, 5. So this is all just to complete the wave 1. Then we're going to have a little bounce back wave 2. And then shazam. Bam. We're going to be way down here. And then by the time this is all done, we're going to be below the 666. It looks like 500. S&P 500 to 500. So if you think we're hurting now, look at this. We're going to be below this. This is how far we've moved, and everybody's freaking out. What do you think they're going to be doing when we're down below this? Folks, this is what we have this summer to look forward to. A move like this, that's worse than this. This is wave A. That is a 1. This is wave C. That is a 3. 3s are the most powerful, strongest waves you typically get. We are in for it. Now we're getting ready to look at the most critical thing of all here, the US dollar. But let me make a comment. There's going to be jokers that say, fear porn, fear porn. You know, fear porn is when someone doesn't give you examples of what's going on. They're just saying the sky is falling. And you can say fear porn all you want, and I'll leave it there because you're going to look so stupid for saying it this time. This is it, and it is now. As Jim Sinclair, unfortunately for himself, said a long time ago, this is it, folks. Now, we are due for a little bit of a bounce here because we're nearing the end of this intermediate wave 3 of wave 1 right now. We're going to get that wave 4 bounce and then a 5 down again, and then we're going to get a wave 2 retracement up. But then the big wave 3 starts. The best thing I could say right now is, as far as timing, and I could be way off on it because we're just developing this wave 1. But the way it looks right now, the real crap hitting the fan, I mean the real big wave 3 starting to head down, you just saw the perspective of that. It's going to begin, it looks to me like the end of May, beginning of June. That's the timing that looks to me. Most of the time between now and then, once we get rid of this initial thrust down to finish off wave 1 down, then we're going to have that wave 2 come back. And that wave 2s, by the way, they're fake outs. They even get people to reverse their psychology. Whew, that was close. We really thought we were crashing that time. Thank God we're coming back. It's all going to be fine. Everything is coming back stronger. The economy is strong. Everything's going to be good. They're fake outs. Wave 2s are known to be fake outs. And then the wave 3 is going to start and everybody's going to be caught off guard. Now, if it was me and I had my money in a 401k, which I don't, I just took it all out. I wonder why I did that. Anyway, if it was me, I would be putting everything into something secure and getting, even if it's only making a little teeny bit of money. I just heard that the average 401k in the last week lost $6,000 in value. $6,000. And did you see how little that candlestick was compared to what's coming? There's going to be mega trillions lost by the American public in their 401ks coming up. So I would say find a financial broker and prepare. And if you haven't prepared by getting food in your house, shame on you. You need to get the basics for you and your family. If you're the man in the house, be the man of the house. Protect yourself. What have you got to lose? Let's say happy days are here again and you went out and bought all kind of groceries. So what? You bought them before the prices went up. If nothing happens. And if something happens, you were the man and protected your family. And if you're an adult or a young adult and your parents, they're not awake and alive with this stuff and you are, wake them up. Somebody in the family's got to take charge and make sure the family's taken care of, because families and other people sticking together, that's all that's going to work this time. The government's not going to be there in the long haul for this, guys. They're just not. It's going to be you on your own. You better learn to think that way. And we're going to be talking about more things you can do, but we're out of time. There's people who have been preparing for this, including me, for years. And I still have stuff to do. If you haven't started yet, this is the wake-up call. Consider this video the wake-up call. And if you want to dismiss it as fear porn, that's another thing. It's an excuse to do nothing. Oh, it's just fear porn. And the reason why I'm harping on this so much is because there is no time this time. It came exactly when I said it was going to come, folks. Exactly on time. Caught it at least a year and a half in advance. Go back and look at the videos. They're there. I also, unfortunately, was one of the first people to say that gold had topped at 1900 and we were going to have a long period heading down with gold and silver. Talked about getting flack from the community. But for me, it's more important to tell the truth than to get people to just subscribe because they love you because you're saying it's going to go to $5,000 an ounce when it's not, at least not then. And by the way, I saw a video by BP Earthwatch who has a totally different opinion. He says everything's collapsing, folks, around the world. Now, gold and silver are up, but don't touch them. Gold will slice you like a razor. Don't touch it. It fools people. And yet he just got done saying it was the only thing going up. See, BP is quoting the Bible, which is fine, which says the gold and silver is going to be worthless. But guys, if that's this time when the gold and silver is worthless because God returns, I'll be the first person trying to throw it out in the street, my gold and silver. If I could bring that day closer today or whatever, I'd be dumping it this moment if I could bring it on. I'd be so happy to dump my gold and silver for that day. But I guess what? If it's not that time when he's returning, you better have some gold and silver. That's my opinion anyway. Don't take my advice. Get your own financial advisor's advice. But if it's not the end, then you better protect yourself and find what to protect yourself, how to do it. And it's not going to be buying stocks. And anything paper you don't own. You don't own paper stocks and oil. Anyway, let me continue on here. You're looking at the U.S. dollar. Something very interesting is going on here that was not expected, really. What we have here is failure to communicate. No, sorry, I just had to throw that in for those of you who understand that. U.S. dollar index. Now, everybody was calling for the dollar demise back in 2008, and rightfully so, I guess. We went down to 72. Guys, if we would have broke 70 back then, it would have been a long way down before the next support. But it bounced right where we thought it was going to. And this was part of the reason why gold and silver weren't going to be at their highs forever then. Anyway, we had this long wave down, wave one down. Let me tell you where we are in the cycle for the U.S. dollar, okay? Here we are. This right here. All right, this represents 2002, right over here, where the wave one started down. All this mess here, all of this, was 5 waves down to a wave one, which happened in 2008. The dollar bottomed right around Lehman Brothers before everything else bottomed. It wasn't an exact correlation. Since then, the question is, are we going into a quick ABC up to a 2 and then the big drop, the 3? Or is it going to be a prolonged multi-year, and what I mean by multi-year, close to 8-10 years for this wave 2 to play out before the U.S. dollar totally tanks? Well, it looked for a long time that it was going to be a typical ABC. So from 1 to 2, you go A, B, C. It looked like it was going to be that typical just, long playing out ABC up to 2. But recently, this is looking like, see this triangle right here? It should have broken out to the south, guys, for it to take that long route up to wave 2. But it didn't. It broke to the north. It broke to the top side of this triangle, which now makes it appear like the U.S. dollar is in its wave 5 right now on its wave 2 up, which means we're very near the end of the dollar rally. Then we're going to head for the dollar crash right away. We're heading for a dollar crash. It's just a question of, have we just completed the A wave, or are we now completing the C wave? And we're done. And we can't tell. Not yet, but we're going to be telling soon. Now, What we haven't done is the top of this triangle. We have not significantly broken the top of this triangle yet. We may have a false breakout right now. But if it's not a false breakout and this continues up and we pass this previous high, which is roughly 101, if the US dollar index on its own, the USDX, goes above 101 and stays there for a couple days, folks, we don't have much longer to go with the dollar then. That means we have a little bit of time before we go up, complete this wave 5. It'll probably be 5 little waves up. And then, bam, it is over for the US dollar. This wave 1 down where we went from 120 down to 72, just like the S&P 500, is nothing compared to what's coming in that wave 3 decline. And this is a major wave 3. This isn't a C wave 3, which is bad enough. This is a impulse wave 3 down. This is literally crap hitting the fan, cat on fire, whatever. This is disaster for the US dollar and for the world, since we're the world's reserve currency. This is a humongous thing to watch right now. I never thought it was going to do this because it looked like this was playing out real nice and slow. Like this was going to be a little A, B, C for A, like I have labeled here. Then a B down here, follow the blue. Then, a C up here where we'd have, who knows, even all the way back to 120 on the USDX. Wave 2s can retrace 100% of wave 1, guys. And then, we're talking now, heck, 10 years from now, 5 years from now, somewhere 5 to 10 years from now, then we'd have to worry about the crash of the US dollar. However, since this breakout to the north of this triangle at this point, now it's like, uh-oh, because when you look at the internal markings here, that means, what it means is this is not in what we thought was going to be an extension, a wave 3 extension up, where this itself would form 5 waves. 1, 2, 3, 4, 5. No, it looks like it's not an extension at all. It looks like 3 is already completed. Now we're at 4 and 5 is starting. Again, what we need to find out right now is very critical. If the US dollar starts falling back and goes below where this triangle broke out, then we're more likely back on this longer track. We have a little bit more time before the US dollar at least implodes. But if we break this 101 decisively, watch out below. It'll happen this year. We won't have that much time left. Guys, this is very serious stuff I'm talking about. We're talking about the collapse of the Western world and the world's reserve currency collapsing just like an Argentina type collapse. That's what wave 3s are. It's that type of collapse is what wave 3s are, guys. Wave 5s are, they end countries. That wave 5, even some wave 3s, when they're on the major wave 3 heading down, a lot of these currencies disappear and they have to be replaced by something else. This is dead serious stuff. If the currency you have in your pocket, if you use the US dollar or you're somehow connected to the US dollar, and we're getting ready to complete a wave 5 top here in the next few months, it is literally about to hit the fan for you and your family, and there is no fear porn involved. This is fact. These waves don't fail. It's just a matter of do you have the wave count right. And if the wave count is right, it is over, and it's over soon. It's not fear porn. It's just logic. Now here is gold on a monthly chart. And here's where we are. Now I left these prediction dates up here just to show you that when these predictions were made, we're not too far off. I thought the low for wave A would be in November 2014. It looks like it's at the end of December 2014 is the low, if that low at the end of December holds. So very close on the guess here for the wave A down. Again, let's look at gold. Gold started its little wave 1 up starting in the middle of 1999. We were down at $200 an ounce. We had our little 1, 2. Remember, see this 2 going down? This is why you don't have to buy if you missed wave 1. Like silver and gold may right now be on their wave 1 up right now. Wave 2s give you a second opportunity to come in, and they're much better than wave 1s. because you can confirm if the bottom holds that you're in a wave 2. We'll get to that later. In any case, from here all the way up to here, so from 2002 to 2008, 6 years, we had a wave 3 up. We went from $270 to $1,000. That is a massive increase. That's a 5-fold increase in the price of gold in that period of time. Then we had a wave 4 decline. And this formed a nice little reverse head and shoulders here. We broke that. We had our wave 5 completion. Now, since then, we've had our 5 waves down to wave A. Correct? 1, 2, 3, 4, 5. And it was in this wave 2 area when I started saying that we probably have had a wave 1 and we're heading down. If we don't soon, when we came back here in this wave 2, if we didn't exceed the wave 1 highs of 1900, that we were more than likely, we could still be going either way. Could have been just a little, breather. But chances are we were heading into a wave 2 with gold and silver. And boy, did I get the hate. And how stupid could I be? Gold is going to the moon. And I'm just stupid for thinking that. Well, look what that plan panned out. I guess better than Jim Sinclair. But it's not me. I told you before, I know who to follow. And we'll be talking about that more too. But let's get into this. We've had 5 clear waves down now to a wave 8. So the only question is it done? Is the wave 5 done? You can count 5 waves even in the 5th wave. But there's actually room for a little bit more down. We're going to look at this closer here in a second. Here is what I'm doing. I'm telling you guys what I'm doing. This is not advice for anybody else. Gold and silver. Silver in particular. I just got some silver because I think we're at the lows. I'm going to sell when we get to this wave B because I'm not sure I'm going to be alive long enough for this over here, this major 3. That's just the way it is. I'm 55 years old, guys. We're talking this wave 3 is going to start 10 years from now or whatever. It could be that long. In any case, I plan on selling most of my gold and silver when we're near the top of a wave B. Then at the bottom, when we go back, when wave 2 does come in, by the way, I'm hoping gold and silver go down right now even more. I hope it comes down here to $850 an ounce. You know why? Because that's deep enough too, or even further, let's say down to 700. That would even convince me pretty much full scale that we have done just like the US dollar may have. We're not going to have an extension on this retracement like a big ABC here. We might be done. And then it's just off to the races with the major wave 3. Oh, I would love that. I'll take the hit right now. In any case, a lot of people think they're not smart enough to realize that. Oh, you want gold and silver to go down? Yeah, because if it does, you're going to make a lot more money sooner. Anyway, I believe we have completed the wave A. We're going to head up in 3 waves. Each one of these waves breaks down, by the way. The first wave up, okay, it's an ABC in its own right. And it's a 5-3-5. 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5. That's how that'll go up. So it should be easy to know when we're close to needing to get out of that. And if we miss the turn here, you'll have a 1, 2 heading down. You sell on the 2. In any case, then you pay off bills or what I'm going to do, pay off bills or whatever, try to accumulate more money if I can. And when we get back down here to C, which will exceed the A lows, that's when you know to start looking. Then on the wave 2, I don't have to necessarily hit the bottom, but on the wave 2 going back up, I buy back in. See, I buy back in at 800 an ounce. And then go for the big ride, because that's when gold is going to go into multiple thousands of dollars. It really is. I don't have any doubt about it anymore. Now here's gold on a daily chart. Here's the wave A. Okay, if I can get my cursor there. There we go. There's the wave A. And actually it's this one right here. I marked it wrong. Here's the wave 5. It came down as 1, 2, 3, 4, and 5 right here. So it looks like this is complete. Then we have a 1, 2, 1, 2, and then we should take off 1, 2, 3, 4, 5, heading up on that. This part of the wave here, we'll get there in a second. But this is a close-up. This is a daily of gold, and we should be there. We really should be there. We're getting good divergences, bullish diversions, which tells us that's another indication that we have hit bottom. We have a nice rounding pattern here. This is called a rounding bottom pattern. Beautiful looking, actually. Gold does tend to make the best everything. Fibonacci retracements, patterns, they just look beautiful. Textbook. Maybe that's because they're manipulated so well. I don't know, but they are really good. And I'm having a problem moving my screen. There we go. So, from 1999, our low in gold. Then in August of 2011, we hit our high. All right. By the fall of 2011, I am telling people something doesn't seem right here. Oh yeah, I'm thinking of silver. Silver actually topped in the spring of 2011. But anyway, by the fall of 2011, I'm telling everybody that we're probably headed into a wave B down. I was ridiculed, laughed at, spat upon, you name it. Told I was stupid. Anyway, here we are. It turned out to be correct. And I'm going to blow my own horn on this. I really am. Because people need to wake up and realize this is it right now. We are somewhere between A and B right now, I believe. Right now. And the idea is to buy as close to A, and with gold and silver, I'm thinking silver because I think silver is going to triple in this B. Where I think gold, the most it's going to do is come close to doubling. Could be wrong. We could get an extended flat, but we'll see. But we're in this box right now, which is right over here, heading up, is where I think we are. Again, we could have one more move down. This whole thing could be a 3, and then we're going A, B, C up to a 4. But right now, very soon, we'd be heading down and make a new low. We'd have to make a new low to invalidate everything before it, and I don't think that's going to happen. To me, it looks like we're heading up. In fact, if you take this A and B here and break that down between A and B, it's this right here. 1, 2, 3, 4, 5 for an A, a little A. A, B, C down to a little b, and then 1, 2, 3, 4, 5 up to a B. So where does this B leave us? That should leave us maybe 17, 18, 1900, somewhere in there, an ounce. Let's call it 16 to 1900 an ounce, where 1750 is my target. It actually is my target. So that's gold anyway. Let's take a look at silver now. Here is silver on a monthly chart. Silver did come up here in March. Looks like March. Let me see. I'm sorry. Here was the high, and I could grab this, but I'm not going to. I'm going to try to make my best guess here. It looks like it was May, June, August. Looks like it was May of 2011, I think, is when we hit, spring of 2011 is when we hit our high in silver. $50 an ounce, $49.90 something. Okay? And ever since we've been working down. And what I believe is an ABC, or A right now, then a B, then a C. Again, the deeper we get in the retracement of silver, the more we are likely looking at the fact that maybe this is all of wave 2. Okay? I know this chart is what you're seeing on the left is off the screen, and can I move it? No, I cannot. This area that's off the screen, this 1 up, that is represented by this one here. The 2 down is represented by this, but more than likely, this is only the A of the wave down. Now we're going to have a B that retraces up something like this, $36 an ounce, $40 an ounce, somewhere in there. It could actually retrace all of it. $50 an ounce. And then we should have one more decline. But I personally am going to buy here at 14 and try to sell in the low 40s. That's some pretty good, darn good money. And it's going to be over a relatively short time period, a couple of years, I think. And then a wave C down. Or if it turns out this was all the move for wave 2, then if you burst through here and it's not a running flat, then that means that we're off to the races on the wave 3. Boy, wouldn't that be nice. And that could be if the US dollar is in the position that it may actually be in right now. So these are very exciting times on the one hand, because some people can take advantage of this. However, the main thing to take advantage of is knowing that you have some weeks left before we are going to see, folks, we're going to see this with our own eyes. You know how the shelves are cleared out because of looting and rioting when things happen? We're going to see that cleared out just because, not because of looting and rioting necessarily, even though that will happen, but it's going to be because the trucks haven't come with the goods. And as soon as people start to realize that the shelves are not filling like they should, I'm already noticing this myself. Now, it's not anything great or grandeur, but I'm noticing certain things are taking a long time to get in, seems like now, where before they were constantly being replenished. And it's not because the goods I want are to the point where nobody wants them. It's because they're probably coming in a container ship that isn't coming across the Atlantic because there's no other need to bring that ship across. There's no expensive goods to pay for it. So that's going to be a domino effect. So if you haven't prepared food-wise with, in particular, long storage items like food that you can use for your family, like rice, and rice will not feed your family alone. You need a complete protein. You need to know what goes with rice. That's why people use rice and beans. Get to learn what food combinations you need to make a complete protein. You will die without getting complete proteins in your system. If you haven't started to prepare, find out right now, get ready to learn how to do that. Now, when I get the new site up and running, you're going to have the resources there. And I'm going to be talking about this more anyway. So I'm going to end the video here. I'm going to have a link below, maybe even here on the screen, to click the screen to subscribe to Thrive and Survive Rebooted, because the videos are going to start coming through there. And you guys, this is it, man. If you want to keep abreast of what's going on, it isn't going to take long videos like this anymore. This was the big update. But the crap is hitting the fan, and I've only touched the surface of all the problems out there, and I'm going to be getting into more and more details with that as we go along. Thank you, guys. Have a good night. Take care.